Today, in this session, we will look into the four strategies for Iron Condor strike selection. So, if you have seen my previous videos, you have seen Iron Condor as one of the option selling strategy. So, how does Iron Condor work? So, this is the Apple option, and Iron Condor is you sell an option in the put side, buy an option to manage the risk. So here you sell a put, here you sell a put here, and then you buy a put in to manage your risk, and then the other side you opposite side you also sell a call, and then you have also buy a call on top of this call option. So I sold a call for 190, I bought a call for 195. In the put side, I sold a put at 145, and I bought a put for 140. So this is to manage our risk that is coming from selling this option. So this is how you open a iron code. Now the question comes, how do you select these strikes? So which strike should you select for um, uh, Iron Condor? How do you select this? What are the different strategies available? So this is something that we're going to look at today. And the first one is looking at the support resistance levels. So what does that mean by that? So we are at the in the Apple stock. So let's go to the graph of Apple. So go to the Apple. So we move to Apple. Apple stock, Nasdaq. Okay, so we have Apple. This is the Apple stocks price movement. I will remove all the trend lines from here. So the first thing that we look is looking at the support resistance level. So I have hourly chart of for Apple, and my option strategy is I want to sell an option maybe 1 month later. So I will look for daily chart here. If you look at the daily Apple chart, you see how the Apple stock prices move. Now what we are going to do is to we draw the support and resistance level. So here, for example, this is a very good support resistance level, and then we look at here. I would say this is a very good resistance level. You can check in my previous video on price analysis in the graph. You don't usually draw just one line, usually you draw a box here to see that range. For example, here, maybe we take here. So that basically your objective is to draw the line so that it touch maximum price points here to get a very good support resistance level. So we see here the price, this is daily chart. So each of these candlestick that we see, it represent the price movement in one day. So for example, in this day uh, on 6th of November, the price moved from here to here. So that's what we see. So this is the data from so many different days, and but you see that in when you reach the price at this level, price is coming down, and when it reach this level, it's again going up. Then it's coming down, again going up, coming down, and so on. So these levels are very important. So when you sell the options, also you look at these levels. So these are very strong levels here. But now, since the price is here, uh, it is a little not a good idea here. But this is, for example, let's see if this is a good support level. Not really, you see. So this is a support, but not a good one. But the one that we saw here, this is a really good one because you see the price action repeating again and again when it reaches this level. So I would say this is if you draw the box here, you see this when even though it came down here, this is around this level. I would consider this as moving around this price range. So 165 to 175. This is the range people are looking at, and once this reaches 71, this range it will go up. So this is my view of the Apple stock. And how much will it go? It won't go beyond 195. Or how low will it go? Let's for that we need to also draw support resistance level down here. So for example here, this is a good one. Or let's move a little bit up here. This is a good one. This is not let's say not much. Yeah. So because we don't, you see it broke here, it again broke down here. This is not really a good one, but this is a good one. For example, because the price, um, yeah, I think this is the best you can get here. It went up when it reached here again, it started to go up. Here also you see a little, yeah, moving around this price level. So 145 might be a good one. 160, yeah, 172 is a good one, but I'm not really happy with this support resistance level because this is not really clear. Let's go to the hourly chart and see if we can see anything better. So hourly see we see a little bit more, we see more levels here. So this is for example a good support level. So it came here, went up, came here, went up, came back here, again went up really high. So again this came here, but it break down. So break down this support level. Now it went up the support level, sent up the resistance level. So this support became the resistance here, and it went up. So now if you look at Apple, and if you want to buy Iron Condor for Apple, we need to find a range. We say in the next, if you're looking for, let's say, weekly option, in the next 1 week, price will not go beyond certain range. This is what we want to predict using Iron Condor, and that's the first strategy that we will look at. So let's put these two ranges good ones as our range. So price is around here. Let's make a prediction that price will not go beyond 171. So you will look at here. Uh, Price is now around 170. Um, so 171, for example, is too near. So this is not a good one to select here. So let's do this one again. So 170, 171 is just above this. Maybe we take something third one. So this is not really a good one because there is not much space for movement. So after 171, what is the another big level here? So another big level is here, 178. This one, 177.50. This is a big, this is a big level. So if you look here, so 177 is a good one. So we can have, for example, we can sell this as 180. So little above the resistance level. So 180, we sold one option at 180, sold the option at 180, and we bought one option on above this 180, 82 to manage our risk. Now we need to look at the bottom side. the put side. Put side, let's say our target is 164. So our let's predict that it will not go beyond below 164 in the next 1 week. Um, because why did we come to this? Because we see that when it reaches this level, it bounced back. So our prediction is it will do the same if it tries to come up. So 164. That is 164. So let's take 162 just below this. So I sold an option. Okay. So I'm just taking for May 3, May 3rd. Sometime, as I explained in some of the previous videos, when you sell options, usually you sell at a really after 35 days just to get a better premium. But just for this video, I will take this after 9 days. So that means we can have this option for the next Friday. Okay, so we have an Iron Condor here. You see, when you sell this, you get a credit at $74 dollars to your account. So this is a credit, and the margin impact. So if you are using a margin account, the broker is going to keep about 176 to manage the risk. So if there is a risk scenario, they need a they need to keep apart a sum. So this is the risk that you're going to take, and that is why they took this 176. But that's a different topic. But just for you to know, you are going to get 74 if you sell this Iron Condor. You get 74 credited to your account, and then you press submit here. You will be able to see this is an Iron Condor for Apple. You sold an option for 180, that's why you have a minus here. You bought an call for 182.5, this is why you have a plus here. You sold again 162.5 put, and you bought something for 160, that is why we have here a plus. Okay, so just to show you how to do this, I'm going to take uh,
Order filled.
now the order is filled. Now you go to the portfolio tab. Um, okay, so this is what we see here. Just now we executed a Iron Condor for Apple, um, expiring on May 3rd. So you see here, yeah, this is what we have. So this is the first strategy. So first strategy, what we did was we look at the support resistance level to sell to identify the strikes for Iron Condor. The next strategy is delta values. So if you look at now the to the Apple, there is a column called delta. So delta actually indicates the probability of price reaching these levels within this expiry date. So for example, there is a um, there is a 25 percentage probability that the price will reach this level within 9 days. That means there is also, um, uh, I mean, the probability that it will reach 25. So this means that, uh, I mean, 25 is really, really, really low. So that means people usually take around, for Iron Condor, they take around 15 delta. Like so here, for example, we don't have 15 but we have 17 or 12, people take 15, 12, 17, or if you have 15 they take 15. So the second strategy is about the delta values, meaning they take the probability of reaching these levels is the same on both sides. So imagine they want to take 17. What they will do is, if you want to sell option with the same delta strategy, so they will sell this option for 17 here in the put side, and here we have 17 but we have 18. So 18 is okay, it's around the same. So here we have, so here we are selling an option um, uh, of delta 12, of delta 17 and 12. Here we are selling the option for delta 18 and 12, so almost the same. And now if you look at it, the credit is 68, so you get 68 dollars credited to your account. Margin is almost the same. So shown in the previous videos, you can also see here, if you click on the profile, you can see your max return. Maximum you can make is 68, that's what is credited to your account. Maximum that you lose is 182, but the probability of losing is just 24%. Max probability of gaining is 64%. Okay, so you can again, I'm not going to do the same execution of this Iron Condor, but I just want to show you how to select strikes based on the delta values. So basically they take delta, almost the same delta on both sides, so that the price, the stock will not go up and down at the same time. Either it will go up or or it goes down. So if it goes up, then you gain in the other side. If you go down, you gain in the call side. So that's idea, and that is why they take almost a similar deltas on both sides. Okay, so that is the second strategy, um, using similar delta values. Now the third strategy is using the same credits. What does that mean? Okay, so let's say you are going to same credits means you you want to have an iron condor, but you are not going to do this together. So here iron condor means you have um, uh, one put credit spread is the put side, and you have a call credit spread on the call side. But if you want to have the same amount, the third strategy, the same credits, what they will do is, what people do for this strategy is, they will do this separately. So first they will sell a put credit spread like this. So here how much you are getting, around 21 dollars as credit. Yeah, so here you have credit put credit spread, then you will set you will execute this. You remember you have 21. Okay, now they will look for a
Fortfilled.
strike here that gives you almost the same credit. So here how much are we getting? Oh, perfect. So here also we are getting 21 credits. So the amount of money that you get from the put side is almost the same as the amount of money you get in the call side. So this is a good example here. We also executed. Hopefully we get the same level. 21. It's 23 now.
Autofilled.
Okay. So if you look at this portfolio, you see here that I have one beer call, and I earned. Uh, so we earned 23, but here you see only 19, because they are also reducing the commission from this amount. That's why we see a little less than what we did. So you see these two positions. One is the call side, and one is the put side, and you have these two two legs. So in this case, we do not have an iron condor, but the strategy is still the same. You're selling at the call side, you're calling at the put side, but we do it separately just to make sure that you have the same credit in both sides. Okay, so that's the third strategy. Now the fourth strategy is equal width. What does that mean? Equal width is you take a strike 1, 2, 3, 4. So here 4, you take a strike 4 strikes from the middle. So 1, 2, 3, 4. Same here 1, 2, 3, 4. Yeah. So you have your equal distance from the center. So this is the fourth strategy of equal width. This is people another. If you look at the YouTube, you will see people having equal width from the center as another strategy that they use. But if you look at now again, the delta values are the same, but this is not always the case. So delta values will not be same when you take it directly equal distance from the center. This will not always be the same, but in this case, the delta values are the same. Okay, so these are the four strategies that we. So until now, we learned these um, uh, four strategies for iron counter strike selection. I hope you learned something new here. There are any questions, let me know in the comments. If you would like to see more videos on option selling, subscribe to the channel and press that bell icon also so that you will be notified whenever a new video is published. Thank you and see you in the next session.